Hey everybody, it's Nicole Benjamin, your host here at Seeking Alpha, to bring to you another episode of Portfolio Pulse, where, as the name suggests, we're keeping a pulse to all the big financial moves happening in the market. Now, joining us today is Rick Orford, and I am so happy to have him. He's been on the Seeking Alpha platform since 2024. So, Rick, thank you so much for joining us today.
Thank you, Nicole, for having me. I am so excited to be here.
Yes, we're excited to have you. So tell us a little bit about your background in finance, how you got on the platform, what you've been up to.
My trading career really started, in 1999. It's been quite a while. I've seen a lot of things happen since then. And really up until about the pandemic, trading was just really something that I did myself. But during the pandemic, I figured I need something else to do with my life, and I actually found talking on YouTube and writing for articles like on Seeking Alpha and other places, and it brought an audience together. I found an audience who were looking for easy ways to break down a company's financials or what they're doing, or even just trading strategies. And so that's why I've been doing this. And now we're going on 6 years, having a lot of fun, meeting a lot of new people, and yourself included, of course.
Well, I want to dive right in. You recently wrote an article, and it's talking about all things memory stocks, things of that nature. So my first question I have for you is, memory stocks have historically been treated as these cyclical commodities. So when you look at Micron's valuation multiples relative to the broader market sector, what specific metrics show that the stock is fundamentally mispriced versus it just riding a peak?
Sure. I mean, that is a really good question. Now, unlike other companies like the NVIDIAs or perhaps the computer makers like the Dells of the world, Micron is historically been a commodity. As demand picks up, they need to create more fabs or more fabrication facilities. And as they make more fabrication facilities, they make more memory. But as they make more memory, then demand goes down, and so do the prices. So this is that cyclicality that you're talking about. Right now, cyclical stocks usually trade at a lower PE or a price to earnings ratio than perhaps, say, an NVIDIA or a more breakout AI stock like Broadcom might be. In terms of Micron, their forward PE is right now about 12x. It's actually a 61% discount to the sector median, to what other chip makers are trading at. But honestly, I think that number kind of understates the case a little bit, because that 12x is calculated based on what we know for fiscal 2026. But there's still 3 quarters.
Now, I want to jump over. While most media focuses on high bandwidth memory, Micron's recent top line growth surged well into the triple digits. So with that in mind, from a product line and a revenue standpoint, what hidden growth engine in their latest report surprised you the most?
Yeah, that is a really good question. I think the standout was data center SSDs. I mean, look, everyone is fixed on HBM. We got the SK Hynixes, we've got the Samsungs. I mean, everybody is thinking HBM, because that's where they make the most money. But SSDs, this actually, I mean, it was $5 billion in a single quarter, and it more than doubled sequentially. I mean, to put it into perspective, that one product line generated more revenue in 3 months than Micron's entire NAND business did in the same quarter last year, when NAND was around $2.3 billion and still going down. Now, we got to ask ourselves, why is this happening? Why is SSD growing so much? Well, the reason is AI is changing, and we have to blame AI agents for that one, because when we go on AI, let's say on ChatGPT or something like that, we ask a question, that's the end of it. But AI agents or agentic AI, these are robotic agents or software that runs over and over and over for hours, days, weeks, doing tasks, and they need to store the results on whatever it is that they're doing, their progress, and they need to be able to do it fast.
Now, Micron has built up this massive net cash cushion while still delivering these record free cash flow. So looking at their profitability and cash flow generation profile, what key milestones or even upcoming dates should investors be keeping an eye on in regards to their capital return and their share buybacks?
Wow. Well, that is the central thesis of this particular article. December 9th, 2026. This is the number one, the most important date that we need to be remembering. It's the second anniversary of Micron signing the CHIPS Act, or at least their agreement. Now, since the CHIPS Act, the buyback restrictions have kept repurchases as basically a rounding error, about $650 million over 9 months. And we also have to remember that Micron's free cash flow hit a record $18.3 billion last quarter. Now, the CFO's words on this was that they intend on returning 100% of their excess cash over time, with buybacks being the principal way of returning that capital. So if we're disciplined about it, let's say, for example, we take that 18 billion, let's say we take that with a grain of salt. Let's say it's 30 billion in cash flow. Theoretically, it's enough to retire about 12% of the company in a single year. But I think this is more of a best case scenario. But regardless, December 9th, when they're able to start doing these buybacks once again, it doesn't matter. This is a real per share growth, even if the business does nothing. It's free growth.
Well, I have one more question for you. Management has flagged an upcoming increase in their DRAM cost per bit. So from a technical and earnings outlook, how do you weigh the short-term price momentum against these long-term structural margin risks?
It's the important part of the bull case, right? Historically, memory companies, they survive because their costs, they fall faster than the prices that they can sell the product for. That's the whole safety net. But management's own commentary suggests that newer versions of DRAM and HBM, they cost more per bit to make. They cost more to make than they were than the past. And that kind of puts a sort of a damper on the cushion. But remember, Micron has spent the past year doing something very unusual for someone that is saying, hey, look, Micron is just at the top of the cycle. It's going to come down. We have to remember, Micron has locked in these volume agreements, pricing and volume agreements with their biggest customers. And these are through 2030. So even if the prices go down, they're still going to be able to sell their memory at these higher prices.
Well, I think we will wrap things up there. Rick, thank you so much for joining us today. And for everybody that's listening in, go ahead, click the follow button on Rick's profile, go read his article, see if Micron might be something right for your portfolio, and we'll catch you here next time. Thanks so much.
Past performance is no guarantee of future results. Content is offered for information purposes only. Any expressed views and opinions do not reflect Seeking Alpha as a whole. The accuracy and completeness of content shared cannot be guaranteed. Seeking Alpha does not take account of your objectives or financial situation and does not offer any personalized investment advice. Seeking Alpha is not a licensed securities dealer, broker, U.S. investment advisor, or investment bank.